all the signals are. It could still, there could be still some details which, which would force the SEC, our ARK 21 shares deadline, January 10th, is the forcing function here. And is there a scenario where the SEC would come to all of us in line and say, okay, we've just discovered this, we didn't know about it, we would like you to, or we would like to push all these decisions back up to them. I don't know, but so far, so good.
Over 95% of ARK Invest founder and CEO Cathie Wood believes we will have a Bitcoin ETF in 2024. Because Cathie works with many institutional clients, her investment management firm has partnered with 21 Shares, a well-known financial technology company, to create crypto-based ETFs. The U.S. Securities and Exchange Commission is reviewing spot Bitcoin and Ethereum ETFs. After an interview with Bankless, Cathie was confident that a spot Bitcoin ETF would transform Bitcoin. Cathie believes permission will occur by January 10, 2024. ARK Invest's CEO said institutional investors may start by investing a few basis points in Bitcoin, but if conditions are met, they will expand their allocations. About $30 trillion in advised wealth cannot be invested directly in Bitcoin. Cathie predicts $1.5 trillion will be invested in Bitcoin and other digital assets after the SEC's approval. Elias Snyder, CEO of ARK Invest and co-founder of 21 Shares, says this is why pioneers like Cathie are enthusiastic about crypto's future. This will be far larger than expected. Bitcoin will enter the next era of broad cryptocurrency use with this major milestone. Cathie's latest Bankless speaking recordings are here. Click like on this video. Follow the channel and enable post alerts for more movies like this.
I don't think, I know that the cash versus in-kind, create and redeem, is an issue here, but, and we can talk about that later, but I think a couple of things happened, especially something 5 years ago in 2018. Cambridge Associates, which is a consultant to institutions, endowments, foundations, and so forth, wrote a paper about Bitcoin and said to the institutional world, okay, you may agree with all of these leaders who are calling it a Ponzi scheme or an environmental scourge on the system, but recognize that the correlation of risk and return between Bitcoin and all of these other assets is very low. So what we probably have here is a new asset class. And what institutions do know is that the best way to increase returns per unit of risk is to diversify into a new asset class. So this is very important. And so Cambridge back then said, you may not like it, and you may really believe all these people who are saying these horrible things about it, but this is the way it's behaving. And our study, and we've put this study out, we're updating it now, on what should be the institutional allocation in a broad-based portfolio to Bitcoin. If you want to, this is as of last year, we're about to publish new numbers, but as of last year, if you wanted to minimize volatility, the optimal weight of Bitcoin in your overall portfolio would be 2%. If you want to maximize your Sharpe ratio, so your return per unit of risk, then the number is closer to 6%. And this kind of makes sense because I remember other new asset classes, real estate, very early in my career. So 70s and 80s, real estate was the new asset class. And institutions started with a 1% allocation and then gradually moved up to that 5-ish%, maybe above. And then emerging markets, when that became a category, because it wasn't one emerging market at a time, but it was a category, a new category. Again, started with 1 and moved up to 5%. That, we believe, is what is going to happen here. And I think the fact that we and others are educating institutions that, wait a minute, this is mathematically metered to go up to 21 million units, and we're at roughly 19.5 million. The scarcity value is already showing itself. And with institutions starting to push in, that will be ever more true. So Might we get a sell on the news? Well, sure, we've had a nice little burst here, and there's just the hedge funds trade on anything, on any news. So you could have a bit of a sell-off, but we think that the institutional demand is going to take this new asset class much higher in terms of market value.
The main reason institutional investors can't invest in crypto in the US is because of the strict rules, but another reason is a lack of infrastructure. In the interview, Aaliyah talks about how important infrastructure is for bringing in wealthy institutional investors by telling a personal story about teaching someone how to use MetaMask. It is clear that the cryptocurrency industry still needs more work on simple infrastructure that will appeal to people of all ages and backgrounds. Opelia says that this is exactly what crypto-related ETFs will do, helping to close the huge gap between crypto buyers and wealthy institutional investors. She also says that this kind of infrastructure will help repackage crypto so it can work with the current financial system and give big asset managers and pension funds a reason to put money into it. Cathie also talks about how big she thinks institutional allocation will get after the approval. Here are more conversation clips.
Look at the performance of Bitcoin over rolling 3, 5, 7 year periods. It is the top performing asset, and overall those periods since its inception, it's the top performing asset out there. So institutions cannot dismiss it unless they think there's they know something that nobody else knows, and I doubt they do, about the underlying technology. Even the risk of a hack, teaching them about, okay, this is the base layer hacks have been de minimis. Philia, correct me. It's the layer ones. It's not the base layer, it's the layers on top that have been hacked effectively. And once they understand that, they have to step back and reassess it, because, base layer Bitcoin is where they will have the exposure, right? In cold storage. It depends on which issuer, but in our case, at Coinbase.
And hacking a smart contract's a very different thing than actually doing anything at a protocol level, right? And I think that's sort of what Cathie's getting at. I would add here 2 things. So we've been selling to institutions in Europe for years and years. And what you're seeing is it always works the same way. First of all, you get through all these questions on whether or not this is legal, what's the structure, how does all this work? Then you move into, okay, well, that's interesting, let me test. And a test looks like nothing, right? Maybe the allocated basis point or 2. Now, here's the issue, and I think this is something that the market's not pricing in today. I agree with Cathie. I think we're going to go to 1%, 5%. It's a new uncorrelated asset class. It makes sense. Historical precedent would suggest that. That's not the day one. The day one's going to be a few basis points. It's going to be a couple of months of compliance reviews followed by a few basis points, followed by a lot of work. So it's going to take longer than people think it's going to, first of all. But what is a couple of basis points of a few $1 trillion? Because the issue is that the numbers are way bigger than crypto has ever seen before. Crypto has no idea what money looks like when you're playing with an extra 3 zeros. We think $1 billion is a lot of money. It's not. And I think that's the piece that's just impossible for the industry to conceive of today. We will get to 1 to 5%. It will take more time than people think. But when you start to get those couple of basis points, what's a couple of basis points of a few $1 trillion? Because that's actually the money you're really playing with on the short time scale. And I just don't think the industry has actually conceived of how much money that really is, how liquid that really is. What does dipping your toe look like at that scale?
Yeah, but I think one of the reasons we now have the big traditional financial companies involved is they know that.
Yes.
They know that very well. They're quite happy to accommodate it now. They have to have been looking at this. I mean, we've certainly been putting the research out, but they needed the regulatory seal of approval, and that will be the SEC approval of a spot Bitcoin ETF, because if it's good enough for the retail investor, again, the SEC is really thinking about the retail investor. If it's safe enough for them, then institutions certainly should not dismiss it as a new asset class. I think the seal of approval from the SEC, especially given how vociferously the SEC has said, I think has made incorrect observations. We know the people in the research department at the SEC, the crypto research department, they are very good. They know what they're talking about. And I think some of what we've witnessed out there has been much more political in nature than grounded in fact, but it has confused and obfuscated. And institutions do not want to get in the way of that kind of dogfight, right? Now they've got the judicial system on their side. Okay, check. Legislative side is starting to move in the right direction. So these are all sources of confidence, I think, for the institutional investor, which is a very conservative investor. We have grown up in a world and that has gone very benchmark sensitive. They don't want to put anything in their portfolios that isn't in a benchmark. I founded ARK for that reason, because there are so many exciting companies and opportunities out there that aren't in benchmarks, and certainly Bitcoin isn't. So this again is one of the reasons I founded ARK. But we needed the checks of the checks and balances for institutions to really say, okay, it's safe now.
In the interview, Cathie and Ophelia said that the money might start coming in slowly, but even that slow flow would be huge for the cryptocurrency industry. Ophelia said that even if we only get a few basis points of allocation to begin with, it would be huge for the cryptocurrency industry, which has never seen such a huge and instant injection of liquidity. She said that the problem is that the numbers are much bigger than crypto has ever seen before, and crypto doesn't know what money looks like when you play with 3 extra zeros. I think that's the part that's impossible for the industry to imagine today. What do you think about Cathie's interview and the future of the cryptocurrency industry in 2024? Please leave your thoughts in the comments below. Also, make sure to like this video and subscribe to the channel to see more videos like this.